Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has displayed yet another rollercoaster ride against its greenback rival in the last 24 hours. It rebounded off the low 58 region and now looking towards the highs around 59.80 to 60 cents. It is assessed from here that we could see the market fail and turn around and look back towards the bottom side of the range, somewhere around 58 cents, which was yesterday's low. Now, with that being said, I would like to point one thing out, that a break of 60 cents would initially set a squeeze in the market and look towards a region of 60, 60, 75, which is somewhere roughly around this level here. If we broaden that out a little bit, the market still, as a point out here, that the break not likely to sustain much beyond there. So therefore I'll be looking for a pullback eventually and see this whole bullish pattern that's attempting to climb higher fail. Looking at the euro, the market took a stab to the upside last night but was very hesitant towards the level of 109.25. From the rejection, the market could see one more challenge above there due to the fact is that the dollar index, which measures the greenback strength against a basket of 6 major currencies, is still slipping away from the 3-year highs of 103.80 after inking in a low around the 101 region. This gave the euro dollar bulls a little bit of a shot of adrenaline, but failed to, you can see here from the candle, if we just step in a little bit there, it was clearly rejected. I feel the market will eventually turn back towards the bottom side of the range and therefore look towards the region somewhere around 106.80 figure. The dollar yen case, well, we got two long-legged dojis, and the fact is, the market's still attempting to try and climb higher, but I feel that we are seeing a potential reversal from either 111.55 to 112 figure 45, and therefore look to the downside with the target holding not at 110.70 but around 109.25 to 35. The British pound, a little bit whipsawed overnight, but nevertheless the market is attempting to try and break higher with the resistance seen capped around 118.45 to 119.25. It is assessed due to the fact that we've seen this rejection of the 35-year lows. The market is trying to stage a recovery, but not quite there yet, and therefore I still feel, although I'm holding a neutral view, that the market could trade somewhat back to the downside. However, do keep in mind, with all markets, the given high risk due to the market volatility, trading does come higher in terms of risk due to the uncertainty given from the market conditions. And no doubt we will see more whipsaw price action. And with oil likely to show a little bit more upside, you can see dollar CAD is breaking down, but we haven't taken out the level of 143.60 yet. If it does take out that level, then we are looking closer to the target of 142.95 down to 142.25. With the technicals breaking down here clearly, does support a bear case for the Canadian dollar. The gold, since the bullish outside range day, triggered, confirmed from the break of 1,515, reaches its target around 1,555 to 65, extends on the rally, and now breaking above the level of 1,600. I do like to note that there's no trend in this rally, and also from the broader picture, when we look at the weeklies, is that there is also no trend either. So I'm a little bit cautious in coming out with a call to the tops to any further rally up towards 1,700, which was the recent highs. Still, the market seems quite determined to see a push higher, so let's see if the market first of all needs to break 1,648 to get the confirmation to the upside. Otherwise, we could see a pullback anyway as low as around 1,550 to 1,570. Wrapping up with oil, I still like the fact that this market can push higher and therefore look towards the top side of the range, somewhere close to the failed area of 28.60.85. If we can see a break of 25.80, then further upside measures is seen. We did get to a high of 82 this morning, so we're not quite cleared that level yet, but the market will be keeping a very close watch. With any support at this stage seen around 24.70, but firm beneath at 23.55 to 22.55. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report. Hope you enjoy the great start to this new day.